Hi, this is Stephen Meade, lifelong entrepreneur, business owner, and global speaker. Over the years, I've read hundreds of books and spent thousands of hours developing what I call the BullsEye belief system. And I've used that system to develop my own companies, as well as help others learn to be specific, targeted, and focused to get exactly what they want in life. Again, I'm Stephen Meade, and this is the BullsEye Guy podcast. Stephen Meade again, back with another BullsEye Guy podcast. And when I say back, I think I literally mean back. Just returned from another week in Malta. And even the word another, I think sounds funny because I was just there for the Delta Summit in October, I think, September, October, we're in November. Anyway, was just in Malta 3 weeks ago. Delta Summit, an amazing event put on by the government of Malta. And then AIBC last week. For those of you that have been watching, we did an interview with Oliver, can't even remember now, but the guys from AIBC, Iman, and yeah, Oliver DeBono, the COO. Perfect. Yeah, sorry about that, Oliver. I remember, just been a long week. Landed back in LA last night. Got 2 hours of sleep because I don't know what day or time. Between traveling and jet lag and what's that thing called? See, I think I'm losing it. Daylight savings time. I don't know what time it is, but I do know where I am. I'm at the Groove Studio, downtown LA. And today we're going to talk blockchain again. We're going to talk blockchain. We're going to talk banking. We're going to talk entrepreneurism. And it should be exciting. And this somewhat is also going to be a few of the things that were covered not only in Malta, but this will be etched in immortality of where I think the industry is going. This will be akin to doing an interview in 1999 and projecting Netflix, or doing an interview and projecting eToys is going to fail and Amazon's going to make it. I'm not going to give myself that much credit, but I want to talk about the future of blockchain, the technology in the industry, and I'm actually going to distinctively separate them out. I'm going to talk about blockchain for business, and I'm going to talk about cryptocurrency for consumers. And you'll understand why there's a difference. Cryptocurrency for consumers, blockchain for business. And couldn't figure out which one I want to start with. So I'm going to start with blockchain for business, and we'll end with crypto for consumers. And here's what I mean by blockchain for business. There's still a lot of confusion in the industry. And I joke all the time. People look at me and go, "Are you a blockchain company?" Mark my words, nobody will ask you that a year from now. When people ask me, "Are you a blockchain company?" I say, "Are you an internet company?" Because again, to me, the blockchain is the fundamental technology. It's not the industry, right? If you're a marketplace like Moneta Pro, for us, we're a marketplace like Amazon's a marketplace. You don't look at Amazon and go, "Are you a database company?" Because they happen to run on a database. Are you a website company? Because they happen to have a website, right? The technology underneath funds and funnels and fuels these things, and blockchain's the same way. Well, enterprises, more and more enterprises are going to use blockchain for a myriad of things, everything from supply chains to contracts. I'm not going to talk about any of that. I think we've covered that in some of the other episodes. I'm going to talk about the problems with blockchain for business as it relates to the new aspect of tokens and raising money. And you'll see where I'm going with it when I tie in cryptocurrency to consumers and blockchain for business. And this is what I mean. We've covered this a lot before. There's new ways to raise money, right? Let's kind of go through this arc. You've got IPOs, super big companies, 10 years, $100 million, been around forever, finally go public. Then you've got ones like a bulletin board, an OTC, especially in the United States. Younger companies might go public very quickly. You had crowdfunding that came out with Kickstarter and Indiegogo and these things that were allowing you to raise money, but they were really gift platforms, meaning you received a gift or a reward. Then you had direct public offerings where if you had a big audience, you could go through and sell stock directly to the audience. And then a year and a half ago, these ICOs, these internet coin offerings or initial coin offerings came out. And again, we've gone through all of these different machinations, IEO, DPO, there's all these different words. The bottom line is companies internationally are still using blockchain as a way to raise money. Doesn't happen so much in the United States because there's still some jurisdiction problems. The U.S. is trying to figure out how to, quote, regulate blockchain. And that's where the misnomers come in. The United States is not trying to regulate blockchain. Blockchain is the technology. What they're really looking at is the usage of the blockchain technology as how you use it to raise money. All of the things that are looking at regulation are around primarily the SEC, which is how you raise money, and the IRS, which is how the government collects money from all of the money you make, and that's called taxes. They're not looking at blockchain. They're looking at the funding mechanism that the blockchain enables. What's missing? What's missing is banking. The next evolution of blockchain for business is really banking. And I'm going to talk about that for a minute. I'm going to talk about what I think could happen to help accelerate the industry. I'm a big proponent. I love the industry, but the industry has problems. Again, I was just in Malta. I was with AIBC, which is part of the Sigma group. The topic in the panel I ran was on the future of financing. How do you use the blockchain to raise money? And if you're successful raising money, here's the issue. If a company goes out and raises $5, $10, $20 million, $1 million, it doesn't matter. Traditional funding says somebody writes you a check, old school, or wire transfers you money. That's now in your bank account, sitting in your Wells Fargo, your B of A, your Chase, whoever you like. And that money then is available to you to pay bills and pay employees. You have money in an account that's accessible to you. That's as simple as banking gets. And you can use online banking. There's all kinds of things you can do. Crypto doesn't work that way. If you raise money through, again, an IEO, an exchange offering, whatever you want to call it, you're using the new exchanges. These are primarily the international ones. We ran into companies that raised 10, 20, 30, $60 million. But they didn't really raise 60 million, watch my air quotes for those of you watching on YouTube, dollars. They raised 60 million in crypto equivalency. And I'm going to keep it simple. What that really means is you have a token for your company, just like you might have a stock. Amazon goes out and issues stock when they go public at $10 a share. You can raise money in the crypto world by selling your token for $10. How does somebody buy that token? They buy it with Bitcoin primarily. There's other ways, but we're going to stay simple. How does somebody get Bitcoin? Well, that's going to be the crypto consumer side we're going to talk in a minute. But let's assume you own one Bitcoin unit and it's $10,000 and you want to buy a token. That company sells you the token. What the company receives is Bitcoin. Bitcoin is the payment mechanism. Why is that important? If a company raises $10 million, they don't really raise $10 million. They've raised $10 million in Bitcoin. That's a problem. Not only is it a problem because it fluctuates, that's a whole different story. If you raise Bitcoin and it comes in your account at $9,000, let's say that's about what it is today, we're November something, 2019. You get $1 million in and Bitcoin's at 9,000. If it drops to 8,000, your $1 million is worth less. So you have to manage this cash flow. But at the same time, if Bitcoin goes from 9,000 to 10,000, your account balance actually grows. So companies have a completely different lens of what they have to do when these investments come in. But even more critical than that, there are no banking products. For Bitcoin to move forward, not even Bitcoin, for blockchain in the industry, you need banking products. That's what's missing. That's what I'm going to talk about. Blockchain for business. If a company raises $10 million, this is my philosophy, what I think needs to happen. Banks traditionally make money when $10 million come in. They loan, the banks loan that money out. The way banks make money is loaning it out. Your $10 million is in a deposit and they loan it out, or they issue you other interest-bearing things like a letter of credit or a line of credit or checking services, right? And you might have to pay for checking and it offers you business. You have money in a bank account. The bank account gives you services and the bank makes money by loaning out your deposits. Crypto doesn't work that way. You can't loan out deposits. So for banks who are profit driven, a bank says, well, you can give me, the company can't send $10 million to the bank and the bank can't loan it out to make money. So we've got a deficiency. The banking products need to come along for what are called crypto deposits or exchange deposits. I believe the next evolution of banking, for a company that raises $10 million, the banks need to offer three things. And I think it's really simple. Number one, what's called cold storage. This is educational. Cold storage means the tokens are not kept in an account online. They're actually pulled offline. And I don't know how to explain that other than saying, imagine the banks. In the early days of the banks, the wild, wild west, the banks were robbed. They asked Jesse James, why do you rob the banks? Because that's where the money is. For those of you that are following the industry, say, oh, well, Bitcoin's been hacked. Let me be very clear. Bitcoin itself, the actual payment mechanism, has never been hacked. The exchanges have been hacked because the exchanges are where your Bitcoin units are held. Just like in the early days, the banks held your money in the vault. Well, as banks evolved, the security on the vaults got better. The securities in the banks got better. The banks hold less in the vault. They learned how to digitize it. Banking systems evolved. The blockchain hasn't caught up yet. The banks need to look at this as, how do you evolve? And if you could take $1 million in a deposit, what we're talking about is providing banking services for the industry. And I looked at it again. I like to use what I call retrospective evolution. What works for the banks and something that they would understand. And I looked at a thing called a HELOC. And a HELOC stands for a home equity line of credit. It's very simple. Again, I like round numbers. I'm going to use $1 million for a house. I know I'm skewed. I live in LA. Most of the time I live in Kansas City. $1 million here doesn't get you much. $1 million in Kansas City might get you 3 homes. But let's just use $1 million for nice round numbers. If you have $1 million home and you don't owe any money on it, good for you. The bank will give you what's called a HELOC, a home equity line of credit, and says, here, Mr. Consumer, here's a checkbook. And we, the bank, will give you a 30% loan because the bank will collateralize your house, which means they own your house as a percentage of what you borrow. So if the bank gives you a checkbook, you can write checks up to 30% of the value that they've given you for that house. So if your house is worth $1 million, a 30% loan to value means you have a $300,000 line of credit. You want to take a vacation, put a deck on the house, buy a car for your kids. It's a process of having a collateralized account on deposit because your house is there. Where does that lead us with blockchain? If you raise money, 10, 20, 30, or $1 million, the capability to move $1 million or $2 million into a bank account, have that bank move it off network into what's called cold storage. That's like taking the money out of the vault and putting it somewhere else. So when somebody comes to rob the bank, the money's not there. Digital's the same way. If it's not in what's called a hot wallet, a cold wallet or cold storage simply means it's not connected to the internet network and therefore makes it much more difficult, if not impossible, to be stolen. If you had $1 million on deposit, the bank could then issue you a 30% loan to value, give you a checking account or a checkbook. So as a business, you could write checks, do your payroll, use your credit card, and at the end of the month, you're given a bill that says you owe $120,000. And you can pay that at the end of the month. The problem in crypto right now is a company has to keep that money. Their Bitcoin deposits are what's called off network. So if you want to move money around, you have to take it from your off network, your wallet, move it into another account, convert it, let's say Coinbase. You move it from an off network wallet into Coinbase. Once it's in Coinbase, you sell it and convert it to cash. Now it's in cash in your Coinbase account. And from Coinbase, then you have to send it to your bank account, Wells Fargo. It's 2 or 3 or 4 steps. The banks need to offer a simple solution. Put a deposit in If a company moved $1 million into the bank, it's collateralized. Offer a line of credit. Charge a basis point. Charge a quarter or a half basis point. I would rather pay money to a bank to know that our crypto is in an account that's more secure than thumb drives and off-network wallets. And the ability to instantly transfer it and convert it to cash within the bank and make payments is a big deal. So what if the Bitcoin fluctuates? The banks can build a simple system. Boy, I must be tired. I never stutter this way. I apologize, but I'll get there. I need a screen that says, on deposit, I have $1 million. My letter of credit or my line is 30% of that. I have $300,000 that I can write checks and borrow against. I have written checks and up to $100,000. I have $200,000 left in my line of credit. It's like a credit card. If you have a $10,000 balance and you've charged $2,000, you have $8,000 left on your credit card. And if it's an American Express account, you pay that off at the end of every month. And if you don't, American Express actually has a program that says, hey, if you don't pay it off every month, you can convert it to a loan and it will pay interest and you can pay it over time. Banks need to do the same thing. The industry needs to move forward. It's easier to work in compliance, what we call KYC, know your customer, and AML. Any of you that hear these acronyms thrown around, if you don't know what it means, KYC means know your customer. AML means anti-money laundering. That's the challenge in the banks is the banks don't know where crypto comes from. They don't know what's going on. That to me is what's fascinating. I'm not going to overplay Malta again, but what's interesting to me is you have these exchanges that are now getting regulated, more international than the U.S. for a myriad of reasons we won't go into. An exchange is now regulated. Let's say one in Malta. There's another one in Liechtenstein. I just read that Bittrex International actually is flipping over from Malta to Liechtenstein, changing to Bittrex Global. I'm quite curious on why. I don't know if it's legal or taxes. I need to investigate that. I'll come back to at a different podcast. But the primary point is an international situation like an exchange in Malta needs to have banking. The qualifications of a company who goes through a listing on a regulated exchange and is a regulated token company is a much more legitimate corporation than a consumer who happens to have a crypto account. Validating businesses is easier to do. There's a higher bar, a higher threshold. Blockchain for business banking needs to evolve, but the banks didn't know how to do it because they couldn't figure out how to make money. It's not that hard. Percentage deposit fee, offer cold storage, offer a line of credit, charge interest if it rolls over. Simple solutions. There's companies out there, like I said, raising 20, 30, 50, $80 million, 100, and have no place to put those deposits. We need to figure that out. That leads us to the consumer side. There's a difference, and I never figured out this word. It took me a while. What's called retail. In the financial world, a retail customer, again, I'm just Italian enough to get a tan but not have an attitude, but that also means I use my hands a lot. Anybody watching on YouTube, like, what's he doing? I do a lot of air quotes. Retail consumers, air quotes, retail, means consumer. How do you onboard a consumer? Again, I was just at this great event in Malta. One of the biggest challenges in the blockchain crypto side of the industry, not blockchain. Blockchain to me is the underlying technology in the business. The cryptocurrency. And again, if you've watched some of our prior episodes, cryptocurrency to me is like a glorified penny stock. I can go online now, E-Trade, Charles Schwab. There's a bunch of different platforms I can go and buy stocks, and that's become easier, and I still have to qualify for an account. In the consumer world, you still need this KYC compliance side because the banks in the industry are concerned about money laundering, as they should. So what do you have to do? Well, you have to prove you're a customer. You have to have a copy of your driver's license or a passport or a utility and then you have to set up an account, and then that account sends you back a code, and you have to write that code and hold the code up on a piece of paper to prove that that code was sent to you, and that code has to look like you. You have all these steps for onboarding that are slowing down the industry because the industry wants us to be compliant. Here's what I think should happen in the industry. Will it happen? I don't know. Again, that's why I like to put these things out there, because 10 years from now, I can go, I said that in episode 19 of the BullsEye Guy podcast in the downtown studios of Groove Radio with Eagle and the team sitting next to me shaking their head. We'll see if I'm right. The crypto side for consumers, again, retrospective evolution. I was just, again, not overhyping Malta. I spent 5 hours with the U.S. diplomat to Malta. Yvonne was great. It's like, how can we solve this problem? Onboarding for consumers. Retrospective evolution, I said, you need to treat it like Zelle. And if you don't know what Zelle is, that's okay. Zelle is a brand new system offered by the banks. If I have a bank account at Wells Fargo and I want to send somebody money, they've made it easier. I don't have to write a check. I can actually go in, just do an email, and I can send money to somebody. But what the banks did is they set thresholds. Right? If you're in a crypto exchange, some of these exchanges have a threshold where you can only trade 2 Bitcoins per month. Well, the challenge is if a Bitcoin unit is worth $10,000, they set that threshold at $20,000. If Bitcoin goes to 40, 50, 80, 100,000, you all of a sudden, 2 Bitcoin units, you're trading $20, $50, $80, $100,000 of volume. The industry went the wrong way. I don't understand these industry guys. I think half of them are stupid. But that's just me. But it's not. The industry's stupid. Here's what I mean. It needs to be a dollar threshold. What Zelle does is Zelle says you can send somebody $500 a day. You can't send them more than $500 per day. And if you want to send it every day, you can. But for the month, you can't send more than $2,500. So they set some dollar thresholds on that says, hey, you're already a holder. If you want to do these things, if you want to send more than $25,000, you have to qualify as a different level account. And if you want to send even more like wire transfers, sometimes we have to send bigger chunks of money. I still have to go down to the bank, fill out paperwork, pay a fee, because I want to send a guy $5,000 in Zelle, wouldn't let me. I'm not qualified. Crypto needs to be the same way. It needs to be as simple as you can sign up for an online account and trade up to, I don't even think it should be $500 a day. I think it should be $500 a month or $1,000 a month. Some dollar threshold has nothing to do with the value of Bitcoin. You can't do it as one Bitcoin, one BTC is what you'll see in the industry, because one Bitcoin right now is $9,000. If it goes to 15 or 20, you're over the $10,000 threshold that banks already have to report. Make it easy. Give somebody, a consumer, instant sign up, $1,000 per month. Let them trade. Let them get used to it. Let them kind of play around with this new world of crypto, which is like playing with stocks. It's trading. You can track it. You'll know what's going on. Now, if the consumer likes it and wants to do more, make them qualify. Give them a personal account, right? So the $1,000 threshold might be a pilot account or an introductory account or a pre-account. I don't care what you call it. Just don't call it a security. Let's not call it a bank account. Let's call it a pre-account. You are pre-authorized, like a credit card. You're pre-authorized for a $1,000 account just for signing up. If you want to do more, then you have to do some KYC. Here's my bank account, not my bank account. Here's my credit card. Here's my driver's license. And that gives me a personal threshold. If I want to do even more, make me a business account. Give me a higher threshold. Charge me a little bit. Make me provide my business licenses. The industry's still just looking at this wrong. We've got this massive bottleneck where consumers have to jump through so many hoops to sign up for things. They're already concerned about it. They've already heard their friends saying, oh, don't do it. It's a scam. Bitcoin's going to go to zero. Might not work. Well, those are the same people in the 90s that said the internet wouldn't work. And you know what? for every e-toys that, well, I won't say for every e-toys, there were a lot more e-toys that didn't work than there are Amazons that did work. But some things do work. Projects will work, blockchain projects will work, but for crypto, for consumers, we need to look at it differently. Can you give a consumer an easy threshold? How do they get on? Give them $1,000. Make them jump through hoops to trade more. You'll get more activity in the system. And then my mind always goes to, how, I don't like to pick on the Russians, but how are the Russians going to take advantage of this? Those dirty Russians are money laundering. I feel bad for most of the Russians. I don't think the Russians are any worse than the Ukrainians or the Italians or half the people down here in LA. I don't think nationality has anything to do with it, but there are bad actors and bad characters all around the world. Some of them just play bad at a different level. And let's say there is a country that wants to play bad or a group that wants to play bad. I was talking to some security experts. My thought was, if you had $1,000 threshold for the month, if I'm a Russian Autobot company that wants to trade $1 million, I would sign up for a couple thousand accounts, right? Technology, internet, just sign up. Well, with today's security, you can actually do IP tracking. If you're an exchange and all of a sudden you get a bunch of trades coming out of one IP address, you can flag it. If you get a bunch of them out of a jurisdiction, you can flag it. If somebody's going to try and defraud the system, they're going to have to set up VPNs, virtual private networks, across nodes, across the network, across the world to try and defraud the system. And if they're going to do that, they can probably defraud the system a million other ways. So what we're looking at is we're worried about how the bad actors are going to take advantage of the system, as opposed to looking at how to get more of the good actors. How do we get more people into the world of trading crypto and trading currency, trading tokens? And the reason I think that's important, again, I've talked to it before. Bitcoin, especially to me, is the great equalizer. A bunch of the other cryptos, they'll go up and down. Bitcoin, to me, allows 98% of the financial people in the world, 98% of the population who's never had access to financial accounts, can get involved. They can't buy an $1,800 stock of Amazon. They can't open a mutual fund account because there's minimums. They can't go to a private banker because they don't have $500,000 or $1 million, or a bunch of people run around LA. Some of the RIAs, the registered investment advisors, they have a $10 million minimum. Knocks a lot of people out of that game. Bitcoin, you want to buy $100, buy $100 worth. And that $100 goes up 2 or 3 or 5%. That means as much to the person that could only afford $100 as the guy that could invest $100,000. Crypto, to me, is the great equalizer. There's not enough people that are involved in the system as a whole because it's been made too difficult. We need to look at onboarding. We need to look at ways to bring people on for smaller trades. Step up. Again, the banks already do it. Zelle has thresholds. Zelle has limits. If you want higher limits, you have to provide more authentication. It's not that difficult. How do you move the system along? And where we're going to end up, this will be in closing. We're going to hear more and more about what are called stablecoins. We talked a little bit about it before, the JP Morgan coin, the Facebook Libra. Where I think this becomes important is, let's go back. I talked about if I have money in Wells Fargo and I want to send $500 in Zelle, I can send it via email. That to me sounds a lot like digital money. I don't think they're running around with a wagon full of money to go pick the $500 up at the bank. It's all ones and zeros. All these people say, I don't believe in digital currency. You have a debit card. Your debit card's digital money. The problem is traditional money, even if it's digital, still takes a long time to move through the network. It could take a day or two to get through. The new digital cash settles very quickly. I ask you, if you're a merchant, if you're a vendor, if you're somebody getting paid, would you rather get paid in 1 hour or 24 hours? If the answer is an hour, digital currencies, digital tokens, stable coins are the future of how you're going to get paid, because digital moves through the monetary system quicker than money, even though money's digital. A dollar moving through the traditional network still goes through a bunch of different stops along the way where everybody puts it in their pocket and holds it and makes money on it. Digital goes direct. It's called peer-to-peer, person-to-person. We need more people in blockchain. We need more people in crypto. We need more consumers online. We need more banks offering business solutions, and we need to move the industry forward. That's it. I hope that helps. Again, I like to do some educational stuff. That is where I think the future of blockchain for business and crypto for consumers needs to go. Again, Stephen Meade, BullsEye Guy, Groove Radio Stations, Eagle sitting off to me. Our podcast last week was with Adam Gaynor of Matchbox 20. Eagle was shaking his head a lot more because it was musicians. This one, he's kind of nodding out of courtesy, but hopefully it made sense to everybody. Tune in next week, thebullseyeguy.com. Again, Stephen Meade, thebullseyeguy.com. Thank you.